Good morning, everybody. Welcome to Gino Live. Let's get that branding in there ready. Sometimes we're bullish, sometimes we're bearish, sometimes we're both. Bulls make money, bears get rich, pigs get slaughtered. So this is what it is, guys. Today's agenda. There's your fast 5 picks. I put them in the July 10th watch list for you. It's right here. I got it on my favorites, right? Now, there's only like 3 bears. The rest are possible bulls. Let me know what your favorite 5 in there. The lesson today is trade management. On trade management, I'm going to go over the past 2 weeks, 2.5 weeks. I think I went back to June 21st and looked at all the trades that triggered that did good. How did you manage them? It's pretty easy to manage the other ones. You got stopped out or they didn't trigger. We'll go through these, okay? Remember, these golden ones are my darlings right here. These are the ones that are undervalued. And when we go through the markets, and I'll leave this up for you guys right here, the July 10th picks, if you don't want to save that. They're in community. They should be in community. If they're not, just reload. So check this out. Fast 5 picks. Find your 5 picks. And what is the whole rigmarole here? Market sector setup. We analyze the market to decide if it's going up or down or sideways. That's the sentiment. And if it's going sideways, we're still going to look for the strongest bull sector, the strongest bear sector. And honestly, if you want to skip market and go right to sectors, that's fine. Then we are going to go into what stock is giving us that doji, that possible starting point of the next trend, the next breakout, the next run, which all these past ones right here I showed you did. We got some good home runs in there. Not amazing, but good. You know, I'm pretty impressed. I'm pretty impressed with myself now after 28 years of trading. And we're doing this using a payday cycle. And the payday cycle only, we'll switch back and forth to double check the regular candles. But what is a payday cycle? It's when you combine the Heikin Ashi and the MACD trend confirmation. Because if we catch that doji, the MACD and the Heikin Ashi will show us the expansion. It'll show us the growth. And it's a red light, green light system, basically, built into the candles. And you're going to get a bunch of trading gems here from Gino. That's me. Why? Because I have a lot to share with you. And who knows what you're going to learn today? Who knows? So if you do learn something and you see a gem, throw the word gem in the chat box, or aha, or wake up moment, or wow, or I learned something, or a star, or whatever. You know, I want to see if you guys learn anything. It makes me excited when I see that you learn something new. But what's important is if I go to the weekly, I'm going to go to the weekly. Make sure this weekend you go to your weekly, throw that crazy color so you know it's a weekly line on that 20. Now, brand new people, you can be bullish or bearish on a daily chart. But when you go to a weekly, your biggest support is the weekly 20 right here. See that? And there's some big traders and investors. That is their buy signal right there. They wait for the weekly to cross, and that is their buy signal right there. In fact, this breakout point was a good breakout point. So right now on a weekly, are we having a good week? It's a bearish week, but we're above the 10, which you just leave it alone. It's bullish. And there's your support. So long-term traders are going to hold it all the way to here because here's their stop loss. Long-term traders right here. This is the farthest they'd put their stop loss. Right there. So see this? That's where it bounces off to 20. When it breaks that 20 and lets go of it, that's not good. That's like a month and a half of bearishness there, which is a small bear, really is. See, like right here, look at this. And when you get the crossover on the weekly, boom, see that? Another month down. Crossovers are never good. They're good on the upside. See, when it breaks above the 20 and that crosses, it just goes. It just goes. So the weekly, as you know, is slower. It takes 5 days to develop one candle. But these trends on the weekly are stronger than the daily. If you get it, think about this real quickly, guys. Think about the logic of this. If you're doing a swing trade like this, when you get into a trade, how many days before you know you're profitable or stopped out? What's the average number of days after a trigger, you're either stopped out or profitable? Sometimes it's the first day you're profitable. Sometimes it's the first day you're stopped out. So do you agree that in one day after your trigger, you might be showing profit It's possible you're stopped out if you put your stop really close, right? Or there's just nothing. After day 2, you might be profitable. There's a better chance. You might be stopped out, or it's nothing. After 3 days, do you think you know if you're profitable after 3 days or you're stopped out? What's your chance of it being nothing after 3 days? Pretty low, right? 4 days. Do you think after a trigger, after 4 days, you're showing nothing? Or do you think you're showing a profit or a stop? Basically, by day 4, if you make it to day 4 without moving your stop up or being stopped out, guess what? You're in a boring trade. It's going sideways. Very unusual. So 5 days, good luck. Try to make it 5 days in a trade without being stopped out or being able to take profit. So guess what? You only need insurance for at least 5 days. So 7 to 14 days on a protective put is all you need for a swing trade. Does that make sense? Any Gino gems out there you guys are grabbing? Any of them? You guys loading up on these? Get your bag out. Get your bag out. There's Gino gems flying everywhere. It's like lobster under a rock. You lift up that rock and they're just shooting out. You're trying to grab them, throw them in your bag, right? Let me just show you a perfect call spread right here. You see the high? You see that 50? That's where you want your long leg. Why? Because if it gets close to here, that's where the volatility, the time value will build up. This is resistance. So you'll see a drop in option prices just above this strike. So you actually want to sell this strike right here because it'll have more premium because it's been there. It's just how it works. So there is your... So to build the spread, like we did in the old days, there's resistance. Here's your target 1. Guess what? That is your spread right there. See that? And then this is your risk. Now you have a delta of about 25 or 30, so you don't need it to go through here. You just need it to go to target 1. So when you get to, so which option has the most premium? Which option has the biggest premium at the monies, right? So you want target 1 to be your long leg. Any Gino gems there, guys, any? Now we're going to get psychological here to see if we can play with your greed and fear. I'm going to test you. Ready? There's room up here, right? Or is it here? On the weekly. Because see how it hits the weekly right here? See that? And then it hits a 20. And sometimes it fakes you out and says, now we're going back down. Hasn't crossed over yet. So we don't have any odds in our favor on a weekly chart. It just we're hoping for a bounce. On the daily, we're starting to see, oh, we cleared the 20. There's some bullish sentiment. We're making a higher high right there. That's target 1. Do you take this bullish trade, yes or no? Do you play the daily bullish signals, and it's a good risk reward, or do you wait for the weekly to confirm? Who are you? Let me ask the experienced traders. AR Jack, Trade Todd, Third Wave. Is this a bullish setup? Can you take it, yes or no? Yeah, I agree. 37 is the target. What do you do on target 1? Somebody remind me. Take a third off. If you need a number, take a third off. Then what do you do? What's your first goal? Get the stop loss to break even. And now I can get it above break even, risk-free trade. Follow it. Follow it. Leave a third on the follow and another third right here under the 10. So you took money here, you took money here, and you took money here. That's it. Where did you take money? 1. 2, 3. Stop loss is protecting your profits. That little tiny move is a beautiful trade, you guys. And it's only, ready for this, $3. $3. So management is important. Do you agree? Mid. Triggered here. So where do you take profit? Is wherever you want. Like right in here would have been good. Right here would have been good. Michael or Markel. Here's the Doge. How was this trade? It hit the high target. That was a beautiful. It doesn't get better than that. Did you do a directional trade on a $1,900 stock? No, you probably did a 50-point bear credit bull put. Most of you probably did not do that trade. Trigger, here's target 1. Did it hit it? Absolutely. Stop loss goes to break even. Take a third off. Take a third off. Take a third off. Great short. Nice put play, by the way. Paychex. Trigger. Target 1 is right there. One candle, it hit the target 1. Blew through target 2. Where does money come off? 1, 2. You still have a stop loss under here. Nice move. 10 points, 9 points. That's a great long call. Paycar. Are we hitting target 1? Right there. Here's the trigger. Get that stop loss to break even as soon as you can. Pre. Nice trigger. How we doing? Did you take any off yet? The stop loss better be way above here. This is the best trade so far. That's a credit spread, but still, look at this. You can probably get out of the credit spread. That's only a 20-point move. Nice. RGA. I take that back. Triggers. How we doing? Target 1. We're at target 3, guys. Do I need to do it again? Okay. Trigger. Stop loss. Oh, we hit target 1. What do? We take a little money off. Stop loss. 1 stays below the candle. And 1 stays below the 10. So right now, that's where we would be. On regular candles, 1's up here. And congratulations to anybody who did RGA. Drinks are on you because that is a 28-point move or 18-point move. I don't know. I didn't catch it. You're lucky. Trigger. Trigger. Did we hit a trigger? Target 1, did we hit it? Yes. Target 2, did we hit it? Yes. Home run. Stopped out here and stopped out today. 1, 2, 3. Pretty repetitious. I'm getting bored. How about you guys? Sorrow. Trigger here. Home run. Silver. Trigger here. Home run. SNA. Trigger here. Credit spread. Probably still in it. Nice trade. Stub. Stub. Trigger. Ran up. Verizon. You remember Verizon short? These are all on all these picks, guys, are right here. All these picks are the ones we did right here. Okay? All these. Okay? I'm no hero. You guys help me. Okay, Verizon here. Verizon. Nice trigger. Looking good. Hopefully you have a stop above the, right? Now, Verizon has some good fundamentals. Be careful. And Wigs. We already did Wigs and Zyle. We already did Zyle. There you guys go. So looking at that past 2 weeks, 24 trades that paid out. Is that good? In the past 2.5 weeks. Yes, sir. Let's do the math. That's 10 a week. 10 a week, 2 a day, 2 profitable a day. Okay, guys. So with that said, it's been a long day. We did a lot of charting. Hopefully it sunk in. Hopefully you learned at least one thing or half of something. Who enjoyed that trade management